I recently got this deal that came to my table. And every time I get a deal come to my table, before I start analyzing, I want to actually share with you guys the mindset of a wealthy long-term millionaire investor like myself. I am a investor. Always look at deal long-term. There's multiple different type of investor. There's what I call a short-term investor. Short-term or like wholesaler. They call themselves investor. They look through the lens of a wholesale lens and look at a deal to see how they can wholesale the deal. Then they got investors who actually flip houses. They look through the deal as in, can I actually make any money fixing and flip this? For me, you guys, I start with the mindset up here as in, can I actually keep this property as a rental property? And if it doesn't fit the long-term rental property using the BRRRR strategy, then what can I do with this property? Can I actually flip the deal? Can I actually wholesale the deal? And since I'm a real estate agent, can I actually help the seller sell their property? This is the mindset you guys gotta start thinking. What lens do you want to play in? If you only focus on the lens of wholesaling, any deal that come across, even if it's a good deal to keep, you might actually step right over it. The short-term players, like the wholesaler and the flippers, you might step right over and go, oh my God, this is a big fat wholesale check. But for me, you guys, if it's a good deal, I say to myself, oh my God, how can I actually take this property down and actually keep another rental property in my portfolio? And hopefully do the BRRRR strategy so I get my original down payment back in my pocket so it doesn't get stuck in it, so I can have that money to recycle and do it again. If it doesn't fit the BRRRR or a long-term fit, then can I flip it or wholesale it? You see, for me, I have the mindset from going from the top, which is the highest and best deal, which is the BRRRR deal. The best deal after that is a flip. The next deal after that is a wholesale or a listing. The problem is agent, they start from the bottom, but they never go above listing property. Some of them might wholesale, but very rarely ever see an agent wholesale. So they actually maxed out at listing. Now a wholesaler, they actually hit the ceiling also as a wholesaler. So they only will see wholesale, but some wholesale see beyond that. They see themselves flipping houses, and there's a small percentage of that. And then if they see a flip, they actually max out the flip. They don't even see the BRRRR potential. For the flipper, they only see themselves as a flipper, and they max out of that. Even if they can have 20, 30, 35, 40% margin, they see that as a great, big, giant flip deal. Very small investor see themselves beyond flipping housing, keeping long term, because a lot of times they actually using other people's money, so other people want their money back. So they can't actually hold on long term unless they refi and get them out of there. The challenge is they did that. Sometimes a lot of their property won't cash flow, especially if they have to give back the investor their money. So many reasons why investors that flip houses or build new construction never hold, because they do a lot of other people's money. The deal only makes sense as a flip. It don't make sense as a BRRRR deal, especially depending on what price point they're in. So for me, I always start from the top, work my way down. And that's a big difference, folks, on people who actually own real estate and actually flip real estate or wholesale real estate. Let's talk about the deal. I get this deal coming across. I look at the property. The first thing I look at, you guys, is zoning. That's the first thing I look at. I always ask myself, what's the zoning on this property? Now, this property happened to be single family zoning. So the moment I know the zoning, I know exactly what to do with the property. If this is zoned multifamily, then I know exactly all the different options I can do with it. If it's zoned commercial apartments, I know what to do with it. So the first thing I look for is zoning. Depending on what type of zoning it is, the second thing I would look for is the condition of the property and how big the house is. Is it a big house? Or is it a small house? And the reason why I look at that is this. Let's say it's single family zoning. I recently bought a property where the house is single family. It sits on a 6,000 square foot lot. And the house was a 2-bedroom, 1-bath, 500 square feet. And it was really in bad condition. That property, I know there's no value in the house. Very little. Majority of the value is in the land. And so when I know the condition of the home, how big this house is, I know if that house is a keeper where I can rehab it and add value to it by remodeling the house or add more bedroom and bathroom to it. And if I can't do any of that because it's so small, then I would just scrape the house and just negotiate with the owner on this house is small, it's really bad, it has a bad floor plan, it's a scraper, I'll give you the value of the land. Now, there's some property I bought where the house is in good condition still, relatively. I still gotta put some money to it, but I can keep the house and I can rehab it, but I can add more units on the property. Sometimes you can keep the property and add to it. I've done that with single family zoning and I've done that with townhouse zoning, okay? First thing I look at is the zoning. The second thing I look at is condition and basically how big the house is. So the next thing I look at is how big the lot is. If it's zoned single family, the house is decent size, okay, I got potential. The next thing I look at, you guys, is where does the house sit? I'm gonna show you this map here. You see the house is sit right in the middle of the lot. When I look at that, I go to myself, the house position on the lot, not ideally. Usually, I like the house to sit more towards the front, so at least I have a backyard to do something. But when the house positioned right in the middle, even if I got a good sized lot, sit in the middle, I'm screwed because I can't do nothing with the backyard. These are the thing I look at. So this property I'm gonna talk about is single family zoning. So I know it's not townhouses, so I'm gonna focus on single family. Let's dive in and let me tell you what I'm dealing with. This property is zoned single family zoning, and the lot is about 5,000 square feet, which is a reasonable size in Seattle. And this house is a 3-bedroom, 1-bath house that's a little bit over 1,000 square feet, so it's not super big. And then the lot again is 5,000 square feet. I know I'm dealing with single family. I know it's a 3-bedroom, 1-bath, about 1,000 square feet. I seen the property. The house, it's not really beat up like some of the houses you guys see. This is a little bit more of a cosmetic fixer than a major rehab studs out. And then this house right here, the house literally again sit on the middle of the lot. After I look at this property, I analyze in my brain. I say to myself, all right, this house is not that bad. It's not a scraper. I can't scrape this house because the value is in the house more than the values in the land. And let me explain that. If there was no house in this area, this lot's probably worth in this area maybe 350, 400 grand max. If there was no house on this and I was comping this vacant lot, this 5,000 square foot lot in this area, probably with 350, max 400,000. But this house, even though it's a fixer, this house is worth more than $400,000. So when you ask yourself, if the house is worth more than the land, then the value is more in the house than the value is in the land. In this scenario, the house is like this. The land down here, so you don't go and buy a house and tear the house down because you pay too much for it. In this scenario, the owner is thinking about like $650 for this property. It's definitely more than $400,000. Now the question is, if I buy for $650, what can I do with this property to make this deal work, or it don't work at all? This house is the 3-bedroom, 1-bath, and the first thing I look for, you guys, is all right, the 1,650, 3-bedroom, 1-bath. Can I get another bathroom in this house so I can get a 3-bedroom, 2-bath? Because a 3-bedroom, 2-bath actually will get way more rent than a 3-bedroom, 1-bath. And of course, if I'm gonna remodel, I'm gonna make it nicer. I looked at busting out the foundation, making the house a little wider, put another bath. But the cost of doing that for a bathroom ain't worth it. Then of course, I look at, is there a basement? In Seattle, we have a lot of basement, right? Some area in the United States, we have basement. Some area you don't. So for me in Seattle, I look at, is there a basement on there so I can add more bedroom and bath? Is there an attic area? Because somehow in Seattle where there's a second story with a roof pitch like this, a little bit on the lower side, can I get more bedroom, more bathroom upstairs? And this house, no, it's a rambler. Then I asked myself, since Seattle has potential for ADU, some of you guys have potential for ADU, some of you don't, but in Seattle, I asked myself, do I have potential for ADU? In your area, right, you gotta ask yourself, well, all the different ways you can get more value on this property, right? How can you add more value and force more value? This house sits in the middle. There's no room in the backyard. And I also look, is there an alley? There's no alley and there's no room in the backyard because the house positions itself in the middle. That play of adding ADU in the back is out the window. So what am I left with? I can't get more bathroom in this house because I'm not gonna bust the foundation. I got no basement and I got no attic, so I can't add no more bedroom and bathroom there. I can't even add an ADU because the house is in the wrong position. So adding value to get more bedroom and bathroom, I can't do much. So the only thing I'm left with now is just this house. So can I even make any money on this house? So what's the play? Let's go through the number, okay? I wrote down, if the owner wants $650,000 for this property, and I looked at this property, it's gonna cost to update this house nicely, it's gonna cost about $75,000. So if I buy it for $650 and I actually put $775, I'll be in it for $720 to $725,000 all in. Then I gotta ask myself, when I do the comparable in the area, what is a 3-bedroom, 1-bath, 1,100 square foot remodel selling for in this area? And when I did my research, probably right around $700,000, maybe max if it's done nicely, $725. So if I'm all in, you guys, for $720 or $725, right? Let's call it $725 just for easy calculation. I'm all in rehab of $725 and the ARV is all in worth only $725. That means I'm breaking even. I'm not even making any money. I asked myself, if I'm gonna do all this work and I break even, what play can I make? Remember, I start from the burr. Can I do a burr? And here's what I asked myself. What's the rent in this area? In this area is $3,000 for a 3-bedroom, 1-bath. If I'm all in for $725, then how much money do I need to put down to actually break even or have a little cash flow? I need to put down 50% in today's interest rate. 50% of $725 is $362,500. So you're gonna have a loan for $362. after I ran the payment, interest, property tax, and insurance, everything, without property manager, I'm gonna be breaking even around $3,000. No cash flow, breaking even. So I say to myself, it makes no sense to put down 50% to break even. The return on your investment is really, really bad. So that's a no for keeping us a rental property. Then I ask myself, can I fix and flip this house? Can I make any money? Well, for easy calculation, if I'm all in for $725, I put it on the market for $725. If I have to pay a commission to sell this property, which is 10%, 10% of $725 is $72,500. That means even if I sold at $725, I don't even get $725. I'm losing $72,500 just in fees. Well, that's a no damn brainer. That ain't gonna work either. So flipping is outside the question. Can I wholesale the deal? If a deal, someone's gonna buy a deal for $650 and spend $75,000 on this house, and they all in for $725, and the ARV is $725, they don't make any profit. If they don't make any profit, how can a wholesaler make any profit wholesaling the deal? Unless they get it for less than $650. So if they don't get it for less than $650, that's a dead deal again. So that deal right there, wholesale, it's also out of the question. So all is left now, you guys, is a listing. Since I'm a realtor, I told the seller, look, this deal is probably not going to be a play for myself or even somebody who's going to fix and flip this deal, because what you want for it, it's too much. You probably might be able to get this house on the market for $650 and maybe someone will buy this property, okay? But just know, if you list this property, you're going to have to pay commission and closing costs. And he realized he wants $650. He didn't want to pay commission closing costs because he wanted the net $650. It didn't work also because he didn't want to actually pay 10% commission at $650 if he listed a property, which is $65,000, which would put him underneath basically, $600 grand. So at the end of the day, after I met with the owner, talked to the owner, this deal, you guys, was a dead deal. It didn't work as a burr, a flip, a wholesale, even a listing. It didn't make no sense because the owner wasn't motivated to sell at whatever price it takes to move the property. He was hoping to get some good number for him to sell, but if it didn't make any sense, he'd rather keep it. And to me, you guys, if you're out there talking to sellers, you want to buy deal, wholesale deal, flip deal, today's time, you gotta find sellers who have to sell, not like to sell, because otherwise the number doesn't work. So in this deal, you guys, this number did not work, and we end up not buying the deal after all that. So I hope you guys, this make a lot of sense for you guys, how I broke down the number, so you guys can see how I think, first of all, the mindset of a millionaire investor for long-term investor, not a short-term investor. And then how I look at zoning, how I look at adding value, forcing value, evaluate number. And at the end of the day, there's a burr fit, there's a wholesale flip, or there's even a listing fit. And one of those buckets, if it works, we'll roll with one of those buckets. If it doesn't fit like this scenario, then we just call it dead and then move on. So hopefully that makes sense for you guys, all right? If you guys like this video, if this make a lot of sense, if this help you guys determine next time you ever find a deal, this is a deal or no deal, or what you can do with it, give me a like, thumbs up, baby. And then also comment in the video if you guys like this, you want me to do more of these deal evaluation, right? See how I think, I'm happy to do that. Let me know. And also, I also did another deal evaluation about maybe a couple weeks ago on the YouTube channel. Go check that out if you haven't watched that, okay? And again, make sure you guys subscribe to the video. Let's go! See y'all soon.